Hello and welcome back to a demo portion actually dealing with chapter 17, which has to deal with statement of cash flows. So what I want to do is to get some practice classifying the transaction types, as well as how to basically classify the cash flow statement. Excuse me. So in our textbook, I'm on page. I'm going to go ahead and say it's 769. Remember, I have the ebook, and if you have the physical book, sometimes the numbers don't quite align up. But what I want you to do is I want you to work on exercise 17-1 and exercise 17-2. Okay. So pause the video. Work on those problems. When you're done, come back or unpause the video, and we'll run through classifying each of these transactions. Okay, so how'd you do? Well, I guess you don't know because we didn't give you the answers yet, right? So what I'm going to do is we have what? A through G. Oh, crap, that didn't work. Usually there's a way to get it to fill. I know you can do it with numbers. Let's see what flash fill did. Doesn't work. Oh well. We'll just run through them. Not a problem. So the first one on exercise 17-1 talks about Tiberi's Corporation, and they have the following transactions during 2017. So what we need to do is we need to look at the transaction and we need to say, okay, how does that result in cash flow from operating activities, investing activities, financing activities, or is it a non-cash investing and financing activity? Okay, so let's look at part A rather, excuse me. A says issued $50,000 par value common stock for cash. So we need to say, is that operating, financing, or investing? Well, we're issuing our common stock. We're getting cash for it. That is a financing activity. So on the cash flow statement, we would see that $50,000 cash inflow show up under the financing activities. Now, B says purchased a machine for $30,000, giving a long-term, bear with me here, giving a long-term note in exchange. Well, we got to ask ourselves, what did we do? We bought a machine. Did we give cash? No, we did not give cash. Instead, we said we would sign a long-term note in exchange for this machine. That is a non-cash investing and financing activity. Okay, so I'm going to say non-cash investing and financing activity. Okay, now let's look at C. C says issued $200,000 par value common stock upon conversion of bonds having a value of $200,000. Well, if you didn't memorize the slides like I had suggested, it's okay. We don't need to memorize that stuff, right? We can logically think it through. What did we do? Well, we took bonds, which is a financing activity, and we took, we took common stock, which again is a financing activity, and we just kind of switched the two out, right? Instead of giving cash for bonds, we said, okay, we'll convert the bonds to stock. No problem. That is another example of non non-cash financing and investing activities, which that should, or B and C coincide with the PowerPoints, right? We said, oh, hey, if we have, there's two main things we would have if we have non-cash investing and financing activities. We just saw two prime examples of those. Okay, let's look at D. D says declared and paid a cash dividend of $18,000. Well, what does that have to do with? That has to do with the long-term debt and equity section of the statement of cash flow. Hopefully you remember that in order to report any changes in either long-term debt or stockholders' equity, we use the financing section, right? We are paying dividends on our common stock, which is an equity account. So this is a financing activity. Okay, let's look at E. What's E say? Sold a long-term investment with a cost of $15,000. We got cash for it. Okay, the problem tells us we got $15,000 for cash, or $15,000 of cash, right? We don't care about any gain or loss. Okay, all we care about is this transaction. Do we classify it as operating, investing, or financing? Well, if you think back to the slides and the PowerPoints and the stuff I told you to make sure you put on note cards or put in your notes and memorize and learn, is what activities fall under investing activities? Well, that has to do with any long-term assets or changes in any long-term asset accounts or any changes in our investment accounts, right? This is a prime example of a change in a long-term asset, right? So, or we'll say long-term investment. I apologize. I interpreted it as being an asset, but it's probably one of our investments that we have that is probably maybe held to maturity or available for sale. So in this case, it is a investing activity on the statement of cash flow. Guess what? It's going to show up under investing. So this is an investing activity. Okay, let's look at F. What's F say? F said collected $16,000 on accounts receivable, right? So what do we have here? We have an accounts receivable. How did we get that accounts receivable? Well, we sold merchandise or we performed a service. That is an example of an operating activity, right? We need to look at the accounts receivable account, they give us the accounts receivable account. We need to know that, oh, this accounts receivable that we have, or this change in accounts receivable, resulted from our operating activities. So so for F, we're going to classify that as an operating activity. Why? Well, because we had a receivable, or we had some cash flow as a result of operations. Okay. And then there is G, right? What's G? Ooh. G says paid $18,000 on accounts payable. Okay. I know you might be thinking, oh, it's liability. Well, yeah, it is, but it's not investing. Okay. Because we said investing has to deal with any long-term assets, right? We said financing has to do with any long-term debt. This is short-term debt, right? It's an accounts payable. Why did we generate this accounts payable? Well, presumably, we either bought something on account that is directly related to our operating activities, right? Maybe we needed to buy supplies on account. Well, why are we using supplies? So we can operate. Why are we buying inventory? so we can operate. Okay, so G is going to be operating activities. Okay, so this one right here, this was exercise 17-1. Now, in the beginning of the video, I said, hey, do this one and do exercise 17-2. Okay, so if you haven't tried it, right, the only way you're going to learn this stuff, it's certainly not by me sitting here telling you about it. The only way you're really truly going to learn this stuff is to actually apply it, right? So if you haven't done this, pause the video and go do exercise 17-2. I'll wait. Okay. So let's look at exercise 17-2, and we need to indicate how each item should be classified of cash flows using, our major categories: operating, investing, and financing, or any non-cash investing and financing activities. Okay, so the first one says payment of interest on notes payable. Right, so we have a cash flow because we paid interest. Right, now remember, and this is where we need to go back to those slides. We need to take notes and we need to memorize that stuff. Okay? When it comes to A, paying interest on notes payable, you might say, oh, that's easy. That's financing. You'd be wrong. Why? Well, because interest on a notes payable has nothing to do with financing activities. Okay? Whenever we take out assuming it's a long-term note, whenever we take out the long-term note, in that case, yes, it would be financing. Here, we're just paying the interest, okay? Since we're just paying the interest, that is going to be an operating activity, okay? So it's going to be an operating activity. I'm just going to type in operating just to, for simplicity purposes. Okay, B, exchanged land for a patent. First question, is cash impacted? Absolutely not. We gave land, somebody gave us a patent. That is a non-cash investing and financing. C, sale of a building at book value. Again, we do not care what the value was. We just care about, number one, did we get cash? And number two, is it an inflow or an outflow? Excuse me. And number three, what section do we put it under on the cash flow statement? So C says we sold a building at book value. We got we got cash for it. That is an investing activity. Okay, let's look at D. D says payment of dividends, right? Well, what are dividends? Dividends are what's the word I'm looking for here? A release, I guess you could say. A release of earnings to the owners or the shareholders. That is a financing activity. Okay, so you need to remember that if we're paying dividends, it's financing. If we're paying any interest that is in regards to long-term debt, the payment of that interest has to be an operating activity. Okay? So let's look at E. E says depreciation. Well, let's think about depreciation. What is depreciation? Bear with me here. I'm sorry. Yeah, E, depreciation. So what is depreciation? Well, think about it. Where does it show up on our financial statements? Well, it's an income statement item, right? We depreciate the cost of an asset because we're operating. I just said the key word there, operating. It's a operating activity. F says receipt of dividends on investments in stock. So we have an investment account. Whoever we're invested in paid us dividends. This cash flow, what is it? Is it investing, financing, is it operating, investing, or financing? Well, because we're talking about dividends that we received from an investment that we have in stock, that's going to be an operating activity. Okay, let's look at G. G says receipt of interest on notes payable, right? So again, same scenario applies, right? What's happening here? Well, we have a note receivable. We must have lent money to somebody. They are paying us money in interest. That is an operating activity. Let's look at H. H says issuance of common stock. We are issuing common stock, probably getting some cash for it. That is a financing activity. Why is it a financing activity? It's a financing activity because any changes in the long-term debt or the equity accounts translates into a financing activity transaction on the statement of cash flow. Let's look at I. I says amortization of a patent. Well, that's an income statement item, right? Why do we have the patent? Well, probably generate revenue, which is part of an operating expense. We're recognizing the expense of that patent, which is an asset, has to be operating activities. Let's look at J. J says issued bonds for land. Was cash impacted? Nope. What two things are impacted here? Well, or what two sections are impacted? Well, the investing activities, because land is a long-term asset. We're issuing a bond that's long-term debt, right, which falls under the financing section. So that must be a non-cash investing and financing activity. K says purchase of land. We bought land. Okay, well, land is a long-term asset. Guess what? It's an investment activity. Okay. Let's look at L. Bear with me here. Okay, let's look at L. L said conversion of bonds into common stock. Well, that should ring a bell because we just did the same exact transaction in the previous exercise, right? We took a long-term debt, we converted it into equity. So that is a non-cash investing and financing activity. Let's look at L. Or that was L, sorry. Ooh, let's look at M. M says sale of land at a loss. Again, I don't care about the value, right? Did I get cash? Sure did, because I sold land, right? So, by selling land, where does that fall under on our statement of cash flow? Well, the cash proceeds from the sale is going to be an investing activity. Okay. That's the cash proceeds. Okay. But then we had a loss, right? They told us it was a loss. So that loss needs to be identified or recognized on the operating or under operating activities. Okay. So there will be times when we have a transaction, case in point, selling something at a loss, that we need to say, okay, we have cash flow from selling the land, right? that hits a long-term investment account or a long-term asset account, but then that loss shows up on our income statement, right? So we need to recognize that as well, but we'd recognize that in investing activities, okay? And then N, we retired bonds. Bonds is a financing activity. Okay, so those are the two exercises I wanted to work on to really get some practice identifying transactions and classifying those transactions per the statement of cash flow, meaning is it operating, investing, and financing. If you struggled with this, go back to the PowerPoints, make those note cards, right? These are examples of investing activities. These are examples of operating activities. These are examples of financing activities, okay? Trust me. If you don't know this, you're dead in the water. Meaning, if you can't classify a transaction to put it into the income statement or statement of cash flow, you might as well stop, because you won't be able to do the statement of cash flow, right? Because we got to calculate something. That calculation is based on correctly classifying certain transactions, okay? So tune back in for our next example or our next video, and we're going to talk a little bit about the operating section and how do we calculate cash flow from operations using the indirect method, okay? So tune back in for that one.